And I have a hypothesis. Especially Gary and Larry, as guys that are very familiar with commodity markets, you can tell me if you agree with this hypothesis. But my hypothesis is that the lower bound of a commodity, lower bound of the price of a commodity, is somewhat set by the cost of production of that commodity. And so certainly in short windows, market supply and demand issues can play with that a little bit, but nothing sustainable. So I, for years, have been tracking the average cost of Bitcoin production across the industry, and I found that it sets the lower bound pretty well for the price of Bitcoin. So in Q1 in my newsletter, I said that the cost of production was $75,000, and in April,
Q1 of 2020.
Q1 of 2025. In Q1, at the end of Q1, I think it was like April 9th, we bottomed at 75 and bounced off of that, right? And in September, I did my revised number and I set it in the high 80s. And I said, average cost of production now is in the high 80s. And, I was more optimistic, Gary, and maybe we'll still see a big number before the end of it. But I said, my bottom floor is in the high 80s. And obviously we had like a week or so we went below that, but roughly that same number, we're bouncing off of the same number. So I think to your friends, like part of the reason I'm bringing this up is to your friends say, well, you bought Bitcoin when the cost of production was 10,000. Well, cost of production now is 90. We'll call it 90 for right now. So it's no different than anything else, right? What was the cost of production at the time that you bought it? It's not that the cost of production changed. Now, in a market like gold or in a commodity market like grains or something like that, the cost of production doesn't vary as much. But in Bitcoin, cost of production changes quite a bit in short windows.
Bob, let me ask you a question. You're 75 and 90 for Q4. Does it take all the mining into account? Because there's a huge spread between the way you mine it and the way Fred Thiel mines it.
Right. Yeah, it's the industry average. So I can mine Bitcoin for 50.
See, I think this is a problem. This is the problem with your math, if I may.
Yeah. Oh, it's okay.
Because, I hear this in the oil complex all the time. I heard some guy with 3,000 listeners last night hoodwinking the audience that they see $100 crude oil again. And if that happens, the whole world falls apart. It's like, yeah, no shit, dude. If $100 crude oil and you get a Treasury 10-year at 7, okay, good. The whole world's falling apart. But you can't base a premise of super inflation in the future. See, I don't see inflation coming. I see a massive deflationary event in the next 10 years, maybe 5, maybe 3. I think we're seeing it right now. You remove 12 million immigrants from this country, whether they go voluntarily or you remove them. I think there's 4 million houses that are going to be on the market. By the way, I use 12 million people, assuming 4 are living in a house. It's a staggering amount of homes, a staggering amount of rentals, a staggering amount of jobs that have been underpriced and taken from Americans. Great companies are going to be built in America if we get rid of the immigration issue. But people are going to have to understand, the retailers in particular, you're not going to be selling $80,000 automobiles, dude. It's not happening. You might rent them, but you're not going to sell them. You might get subscription fees, but you're not going to sell $80,000 cars in the future. It's not happening because supply is going to show up here. I mean, you got Jeep showing up with a $15,000 car. Toyota showing up with a $15,000 car. So I think there could be a two worlds. Fred Thiel is not making money mining Bitcoin the way he's mining it. He's at $135,000, and then you have you sitting down here making a big old chunky margin. Crude oil producers in the United States produce for $45 a barrel. This was my point. And they're selling it for $65. And the word dry hole has been completely removed from petrochemicals. There is no dry hole.